A lot of traders get confused when it comes to support and resistance versus supply and demand. Believe me, I was there once. Today I'll be sharing what each of these concepts is, how to spot them on the chart, and how to trade them. This isn't financial advice, but a clear framework you can test and refine. If that sounds interesting, let's break it down step by step. What is support and resistance? Support and resistance are horizontal price level where price has reacted multiple times in the past. Support, a level where price tends to stop falling and bounces up. Where resistance, many traders see it as a ceiling where price tends to stop rising and drops to the downside. How it works, it is based on historical reaction. Price respected this level before, so it might respect it again. Yeah, if most of you that have come across baby pips, you might have come across concepts like this: support and resistance, and how price reacts on them. Okay, key characteristics drawn as lines or zones. I prefer you drawing it as a zone rather than a line, based on visible highs and lows. Very common among retail traders, works well in range markets. Limitation: doesn't explain why price reacted, often gets broken easily in strong trend, mostly when you are using lower time frame, for instance 15 minutes, 5 minutes as support and resistance. It often gets broken easily when the trend is strong. Okay, and now, just as I said, those of you that have read baby piece, you might have heard when they say when a support when broken turns resistance, and a resistance when broken turns support. From this little illustration here, you can see how it works. You can see that this was a resistance zone. Whenever price gets there, it pushes price downward to a support zone. Whenever price gets there, you can see the reaction back to a support zone. What happens after price broke this particular zone? This resistance zone now becomes support. Okay, same thing here, a resistance zone, a support zone. When the support zone gets broken, price reacts on it, turning it from a support zone to a resistance zone. For those traders that trade support and resistance, they should understand what I'm trying to say right here. Okay, now what is supply and demand? Supply and demand are zones where big institutions placed large orders, causing strong moves. Demand zone, areas where buyers entered aggressively, and supply zone are areas where sellers entered aggressively. How does it work? It is based on order flow and imbalance. Price left this area strongly, meaning big money is here. Okay, you wait for price to get back to that zone that it previously left an imbalance to rebalance the market before you enter a trade. Key characteristics drawn as zones, not lines. Yes, if you have seen somebody that says he or she trades support, supply and demand, or SMC, you always see them marking those particular areas as zones and not just line. Identified by strong moves, impulses, focuses on institutional activity, often aligns with smart money concepts. Advantages: gives you reason behind price movement. You remember when we were talking about support and resistance, it doesn't explain why price reacts. Only what you should understand that whenever price gets there, there must be a reaction because price has tested that zone multiple times, but the explanation behind why price is retesting it is unknown to us. Okay, but in supply and demand, it gives you reason behind price movement. It is either there is liquidity seated there, it is either there's an imbalance candle at that particular zone. There must be a reason for why that particular zone is there. Move effective in trending markets, just as support and resistance mostly on a ranging market. And if you are trading support and resistance, if you spot such entry, or if you spot support and resistance on a higher time frame, let's say on a daily time frame, you should scale down to a much lower time frame for your entries. Okay, because on a much lower time frame, that is when you can start seeing some structures, right? But supply and demand, you always want to trade supply and demand on a trending market. Market is either breaking structures to the upside or to the downside. helps you enter early before retail traders. And as you can see from the illustration we have here, you can see that after a clear break of structure, price pulled back. We had liquidity seated here and we had another block seated right here. Price mitigated it and we are expecting a drop to the downside. Simple analogy. This is very important. Support and resistance is equals to, you see where price bounces off from. You see that whenever price gets to a certain area, a bounce must happen. Whenever it gets to that area, a bounce must happen, okay? While supply and demand, you understand why it bounces. Just as I said, why did price bounce at that particular zone? Is there liquidity? Is there an order block? Is there an imbalanced candle? That is what supply and demands will tell you before you can start looking for entering opportunities at a certain zone, okay? Now, practical example, price touches a resistance, you sell. That is support and resistance mindset. It's either when price touches it, you sell, or price touches it, you wait for extra confirmation. It could be a bullish engulfing candle, a bearish engulfing candle, or a hanging man, a hammer, whatever candle pattern or whatever you use as your confluence. Once price gets to a resistance zone or a support zone before you enter a trade. But for a supply and demand, price returns to a supply zone where a strong drop started. You sell with confirmation. Supply and demand mindset. Now, what does it mean? It simply means that when price gets to a particular zone, the confirmation you are looking for is, was there an order block there? Has price swept liquidity? Is there an imbalance candle at that particular zone? Did price break structure to the downside or to the upside? Those are the confirmations you need before you enter. Now, I am going to take you to my trading view and show you a real life chart of how each concept works. Let's go. Now, you can see right here from my chart, I was able to demarcate what support and resistance is. You can see above here, we have resistance, and below here, we have support. And based on our explanation, we said these are zones where price bounced off multiple times. So it is believed that whenever price returns to those zones, there must be a reaction. You can see right here, price bounced off this area. It bounced off this area, right? On the support zone, you can see the bounce. You can see how price is bouncing off this area. Now, for someone that trades support and resistance, what will he or she do? He or she will wait for price to bounce off this area, give you a confirmation candle. Just as I said, it could be a bullish engulfing candle, it could be an inverted hammer, it could be whatever candle you want to use as your confirmation candle, or whatever price action you want to see here before you start looking for selling opportunities. The same thing will happen once it gets to a support level. You can see immediately price started dropping to the downside. On getting here, it gave us this hammer, this particular candle, signaling a bullish move to the upside. Okay, you can now start looking for confirmation at this particular zone. Now, what happens when a resistance zone is broken? You can see that once a resistance zone is broken, it turns to support. And what happens? Immediately price broke this zone, it came back to test this particular zone before pushing to the upside. Now, this zone that was previously resistance now turned to support at this zone and at this zone. You can see how price bounced off this zone, and those that enter the market at the bounce should have made some profit. Same thing, immediately price break the zone, you can see how price went back to test that particular zone. Now, previously it was support right here, but immediately after breaking it, it now turned to resistance again. And you can see a support level when broken turns to resistance. Immediately price broke this particular zone. You can see how price went back to test it, signaling to traders that this is no longer a support zone, but now a resistance zone, and price drop. But for someone trading supply and demand, okay, you won't enter the market at these zones. Why? Because you've understood that you should look at the structure of the market. After a break of structure happens, you want to look for the origin that caused the break of structure, right? Now, where is that origin? You can see that we have an order block here. You have an imbalanced candle right here. And all these things you are seeing here that support and resistance use it as entry. You see it as liquidity that price is going to sweep. You tap into your order block for you to start selling from. Okay, so that is just the difference between the two, right? Now, if you are that trader that have always been confused, not knowing what support and resistance is or supply and demand is, you have been hearing support and resistance, I trade supply and demand, and you were like, what's the difference between the two? I hope I've been able to break down how the two concepts work. What matters is backtest it and use it to your advantage. Whether you are trading support and resistance or you are trading supply and demand, it doesn't matter. What matters is your understanding of each of these concepts and how to use it the right way. If you are yet to subscribe to the channel, do so and turn on post notifications so that you get notified whenever I drop contents like this. See you on my subsequent video. Stay blessed. Bye.